All right, you did it. You followed the plan from the first video. You opened an account and you made your first investment. You felt that rush of excitement of finally being in a game now. But now comes the hardest part. Not picking stocks, not timing the market, but fighting the single greatest enemy to your financial future. Your own dumb human brain. Today, we're going to pull back the curtain on the number one mistake that derails more new investors than anything else. It's a silent portfolio killer that's responsible for the classic, soul-crushing trap of buying high and selling low. Look, I've made this mistake. Your friends have probably made this mistake. And by the end of this video, you will have a simple, unbreakable framework to make sure you never, ever make it yourself. The number one mistake is reacting to the daily noise. It sounds simple, but it's a trap that's constantly being set for you. The stock market is volatile. It goes up and it goes down every single day. That's its nature. Financial news, however, is designed for one purpose: to get your eyeballs. And the best way to do that is to make you feel like you need to do something right now. They thrive on panic. This creates a dangerous psychological cycle for the unprepared investor. Let's break it down, because this is the whole game right here. When the market is soaring, when every headline is positive, you feel FOMO, the fear of missing out. Your friends are talking about their crypto gains. You see green all over your screen, and your brain screams at you to pour more money in, often right at the peak when prices are highest. Then the market turns, a bad economic report comes out, a global event happens, the headlines flip from positive to negative. Now you feel FUD, fear, uncertainty, and doubt. Your portfolio's down, and every instinct in your body, honed by millennia of evolution to run away from saber-toothed tigers, screams at you to sell, to stop the pain, to cut your losses. So you sell, often right at the bottom. This is emotional investing, and it is a guaranteed, mathematically certain way to destroy your wealth. You will consistently buy high out of greed and sell low out of fear. The exact opposite of the entire fucking point of investing. If this cycle sounds familiar, or if you've ever felt that pull of panic or greed, do me a solid and hit that like button. It helps me know we're talking about the real stuff that actually matters. So, how do you fight back? How do you defeat an enemy as powerful as your own emotions? Well, you don't. You don't fight it. You make it irrelevant. You do this by building a system that takes you out of the equation. There are 3 pillars to this unbreakable system. Pillar number 1, an automated plan. We touched on this in our first video, but it's the most important defense you have. That's dollar cost averaging, or DCA. By setting up an automatic investment from your bank account to your brokerage account every single week or every 2 weeks, you make the decision once. You decide today to invest $100 every Friday, or whatever you decide to invest every Friday. For the rest of the year, that decision is made. It's done. You don't have to think about it. When the market is down, your automatic investment buys more shares for the same amount of money. When it's up, it buys fewer. Over time, this smooths out your purchase price and ensures you are buying consistently, turning market volatility into a massive advantage. Your system does the smart thing for you, especially when you are most tempted to do the emotional, stupid-ass thing. Pillar number 2, a long-term perspective. You have to fundamentally change how you view your investments. You are not renting stocks hoping they go up tomorrow. You are a business owner. When you buy an S&P 500 ETF like VOO, you become a silent partner in 500 of the most successful companies on Earth. Think about it this way. If you owned a small percentage of a successful local coffee shop, would you panic and sell your ownership stake because they had a slow Tuesday? Of course not. That would be stupid. That would be insane. You believe in the business's long-term ability to generate profit. The stock market is the same thing, just on a massive scale. You are owning a piece of the American and global economy. Your time frame for success isn't this week or this month. It's this decade and the next one. Your greatest advantage as an individual investor isn't picking hot stocks. It's time. you have the ability to let your investments compound for decades, something hedge funds with quarterly performance reviews can't do. Don't give that advantage away by thinking like a short-term trader. Pillar number 3, a media diet. This is the most practical step you can take today. If checking your portfolio every day makes you anxious, stop checking it. Seriously, if watching those screaming heads on financial news makes you want to panic sell, turn it off. Your investment plan is designed to work over years, not hours. The daily chatter is just noise designed to sell ads. Limit yourself to checking your portfolio once a month, or even a quarter. The goal is to detach your daily emotions from the long-term mechanical process of your investment plan. So, the next time the market drops and you feel that knot in your stomach, remember the system. Your automated plan is still buying. Your long-term perspective knows that this is just a single stormy day for a forest that will grow for decades. And your media diet is protecting you from the noise designed to make you panic. The mistake isn't a falling market. The mistake is selling into it. That's how you lose. We're here to win. If this helped you, subscribe. We're cutting through the bullshit and talking about what really works. Our next video is all about boring side hustles that can actually make you real money to fuel this whole plan. You're not going to want to miss it. Thanks for watching. Peace out.